Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor. And this video is not financial advice. And it's especially important for me to clarify that in this video because we are talking GameStop stock today and my expectations for what's ahead for the stock, not just post Q3 earnings, but also into 2026. And I think it's really important to talk about because we have a lot of people that feel convinced that no matter what, GameStop will always return to $20 a share, right? It's just going to pump into earnings and then dump into 20s. And we will see if that ends up being true. But I want to make the case, my expectations for what I think the stock is going to do and help you understand what you are saying if you think that the stock is stuck at 20 forever, and maybe help expose some kind of implications that don't necessarily make sense if you were to hold that belief. I'm excited to get into it. What's up, Active Rehab? What's up, Ryan? What's up, Tristan? It's a good day. I'm excited to talk the stock. Before I do, I did want to say thank you and congrats to those who have subscribed. We are at 2515. 10 subscribers left to reach 2525, which has been our goal to reach by earnings. So, 28 hours. What's up, Battle Rat? What's up, Proselytize? About 28 hours left for 10 more subs. And then we would hit our goal, and the Halo Sub Club would be complete. It'd be finished. So if you want to be a part of it, if you want to be someone that was a subscriber back when there were less than 2525 subscribers, there's only 10 spots left. I also wanted to say thank you and congrats to those who have joined the channel as fans and friends. All the earnings of the channel go to DRS Book GME shares. And you know what? We're accumulating a Budget for Life infinity pool right now that has $77 of gains underlying. So take that, haters. Take that, shorts. What's up, Green Candles? What's up, Punky? Good morning, everyone. Green Candle says, more 10, please. Well, I don't know if this will be 10. It might be a little bit, but it's going to be helpful. It's going to be pretty exciting. Proselyte says 14 billion fair value. Ryan asked me, do I expect another warrant offering post earnings? It could happen. I'd say it's more likely than not, but I would not be surprised if they don't. But would be pretty. If they do, you would hope it's an even higher strike, I think, because it's free money for GameStop. Like the warrant provided to a shareholder does not cost GameStop any cash. Obviously, it costs them dilution once the warrants are exercised. So you would want to see them keep raising the strikes on those for them to continue to dilute at higher tranches as those tranches are met. And in the interim, people do have the opportunity to trade those warrants for shares if they would rather hold shares. So it's kind of like it's free money. It's a genuine dividend to consumers. And it kind of signals dilution before it happens. So you don't have to worry necessarily about dilution happening, like a rug getting pulled out from under you. It's like, oh, sweet. In this amount of time or at this share price, right? It's kind of like, I almost think of it like every time Tesla has a pay package debate with Elon Musk and whatever, it goes to court, all that stuff. And shareholders have to decide if they approve it or not. And it's like, look, if we're worth blank, then yeah, we're going to pay Elon blank, and it's kind of like, as a shareholder, it's like, well, I mean, shoot, if we're going to be worth blank, then I guess it's pretty good. If they issue warrants at a 38 or 40 or a 45 for another 6 months out or a year out from their current one, it's like, well, dang, I mean, I don't know, 80% return in a year. That'd be pretty good, and then you get cash generated on top of it, obviously only at that strike, but it raises the floor substantially if you think about those tranches being hit. So, anyways, I would not be discouraged if they issued a warrant. I wouldn't be like hyped if they did. It would just be like what I would guess would happen, about a 70% chance. If it doesn't happen, I'm not like extra bullish about they didn't issue a warrant. That's so great. Like it would not move the needle too much for me one way or another. Punky says, really been enjoying your content. Thanks, Punky. I do appreciate it. Yeah, we just had Trade In Anything Day this past Saturday. Some fun press. So you got to love that. Proselytize says there's no reason to issue more warrants. And ultimately, GameStop has said like they're going to raise money. Their priority number one as a business is to utilize cash and other means of cash, right, to increase shareholder value. So whether they are done raising money and they're only going to keep now funneling their internal cash generations, it's possible, but I think they've made it clear that their long-term value as a retailer is shifting from physical brick and mortar video games into online sales of collectibles and into gamified sales of digital power packs, right? That's the kind of value arc for them as a retailer, but the value arc for them as an asset manager, Ryan Cohen said that long term, the value of GameStop is probably going to be primarily driven by its M&A, right? Its asset management company, its other ventures that it ends up getting into. And so, however bullish the digital power pack numbers come in, that's like Ryan Cohen is substantially more bullish than that on the other opportunities that he has yet to even disclose. And so, if he wants to allocate even more cash to those currently undisclosed opportunities, I would not be upset at him for doing that. But I would hope that it came via warrants rather than, an at the money offering or something. An at the money offering would be, frustrating and discouraging to a certain extent, but not obviously concerning from a long-term value perspective. But I would be genuinely surprised if they didn't at the money. Let's get into the conversation. I will try to peek at the chat in the corner. If you want to make sure I see it, do a super. If you tag me, I think that might sometimes make it a little brighter. No pressure to do supers, of course, but I can only see that small. Then I can see a little more of it. But then you're dealing with them. And so, anyways, if you want to make sure I see it, drop a super. I will take questions. Let's dive into the topic at hand, which is what's going to happen to stock. And I wanted to highlight this combo. If you want to go back to this video, it's the most recent one I did, modeling GameStop's Q3 margins. There are actually a couple comments that shared the same sentiment of, hey, I think it's going to run to something around 30 and then come down to something around 20. Now, why do we think that is the case? That's what's happened so far, right? Especially the past couple quarters. 33, back down to 22. 31, back down to 21. 29, back down to 20.57. This most recent low was $19.97 per share on November 20th, was the low, or 1994. Oh, let's go. That's when I was established, boys and girls. I have a hat, and on the on the middle of it says established 1994. I think it's from Old Navy. So me and Old Navy have the same birth year, apparently. Anyways, the assumption is, this is what's happened. It has to happen. And I don't think that 20 is in the cards again or anymore for GameStop. And I highlighted this this past video. If you want to read this comment, kind of back and forth. Divvy, I appreciate the comment. This is not a shot at Divvy at all, who's been super active on the channel. But I asked Divvy this question. I said, because ultimately the take is, well, Wall Street's corrupt. They make all the rules. They can do whatever they want, right? And I said, well, if GameStop, and I'm asking you guys this question now in the chat and those watching the video, if GameStop had $100 billion in the bank, Do you think that Wall Street would be able to manipulate the stock down to a $10 billion market cap? Do you think that's in the cards? And I would say, is it possible for a day? Right? I mean, we like, sure, like we saw whatever Berkshire Hathaway Class A original shares go from 200K a share down to 200, right? That blip in overnight hours or whatever. Like you can see in a flash moment or in a day, sure. But if we're talking like, hey, there's going to be a very short term run, right? A very short term spike, but the trading floor, right? It's just going to hover at 20, right? It was below 23, below 22 even for almost a month this past month. So that's different than like um I don't know. Saying that it will stay low is different than saying it will touch low in a brief moment, right? Like May 29th it touched 35, right? But that to say like could GameStop, like if you were making a video on May 1st when it's 28 and saying like, could GameStop eclipse $35 a share? Like heading into earnings, like is GameStop going to uh, be worth 35 a share? It's like, well, obviously the market didn't feel yet like it was worth 35 a share, but yes, it did touch it for a day, but then it was down to 22, right? And stayed at 22. Now, a couple things I want to tie into this conversation because my main point is GameStop does not exist in a vacuum, right? And no stock exists in a vacuum. So I personally do not think Wall Street is infinitely powerful, although I do think the system is rigged and that most of Wall Street is corrupt. I think there's a lot of like things working against us as GameStop long-term holders due to how manipulated the stock has been. But I also think that there are other people in the world with money, right? So this question of like, if GameStop had 100 billion in the bank and they were still continuing to grow, increasingly profitable quarter over quarter, year over year, right? Do I think it could be worth 10 billion? Like, does Wall Street have that power? Again, if we're talking about in a moment, in a heartbeat, I mean, sure. But what's going to happen? Like all the money in the world is going to pile into the stock. You know what I mean? Like there's other people with money that have the ability to buy it and have the ability to DRS it, right? And of course, Ryan Cohen and DFE and GameStop itself have the opportunity to buy the stock at that point, right? Like they would not be able to sustain that type of valuation. And so the question then becomes like, well, how low can the stock be priced before like these fundamental triggers start flashing red and signaling to the world that it's time to YOLO into GameStop stock? And if you break that fundamental pricing floor to where it is no doubt obviously fundamentally undervalued, then you will see institutions continuing to buy in, etc. And you saw that institutional ownership has grown over the past 2 years, but this most recent run up, right before the close of Q3, right, October, or maybe it was September. It's a good question, actually. When the institutional filing windows happen, whatever. So, some portion of institutions sold during this chunk of time. And that's not necessarily like a red flag. What I'm getting at is the past crashes down to the 22 range. Like if you think that that is I don't know, if that was fundamentally fair, then you would also think that fundamentally it wouldn't be able to get that low again. And let me just get into a little bit of what I'm trying to get at, because and we've been conditioned, right? Look, it's stuck at 20, right? We know this. It can't go further than that. It's always going to come back to 20 because that's just what happened. Well, here's the thing. In this entire window of time, in the past 5 years, GameStop has never been fundamentally undervalued on a trailing 12-month basis. On a trailing 12-month, it's never been fundamentally undervalued. It's been technically undervalued. It's been suppressed by Wall Street, right? Due to the level of shorts in the stock, you would think that it should be worth more than it was. But and also if you're looking on a forward 12 basis, you could say, man, right now it sure seems super fundamentally undervalued. Well, why? Because of what we expect and anticipate that Digital Power Packs is doing. Well, we don't have any trailing 12-month data for digital power packs. So again, on a forward-looking basis, is GameStop fundamentally undervalued right now? Yeah, I do think so. On a trailing 12-month basis, they have never been fundamentally undervalued. But in a day's time, right, by tomorrow evening, some of the forward is going to finally be the past, right? We're going to finally see on a TTM, on a trailing 12-month, the impact of some of the forward-looking transformation that GameStop is accomplishing. And that's not been the case before. It's not been the case. Also, digital power packs has never been like we have not seen any digital power packs numbers for any of the past 5 years. I know it sounds like I'm saying the same thing again, but there's a different thing that I'm saying. Okay? Because digital power packs is fundamentally not a physical retail business. It's not. Everything that GameStop has done so far in this past 5 years has been related to increasing the value of their brick and mortar retail. And part of how they've increased value is lowering costs. Part of how they've increased value is shifting some of that online, right? If we can get a higher portion of customers online, that's going to help our margins, etc. But everything is still very much GameStop, the retailer, working on their retail business. And retail businesses are somewhat capped on what type of PE is fundamentally fair and fundamentally attractive, right? How low of a PE do you have to get before the others in the world with money would say, oh my gosh, we got to buy this stock? And it's relatively low, right? You'd have to have a very low PE as a retailer for the big money of the world, of other countries, right? Whoever wants to be long GameStop out there in the world, right? If Wall Street were to crash GameStop right now to $1 a share, right? People would pile in, right? So it wouldn't be able to stay there, and then it would end up squeezing because the only way they'd be able to get it that low is through crazy levels of shorting in the first place, right? So all they can do is get it low enough to where it's low for them, right? To save on their whatever, to be able to roll swaps, whatever you think about Wall Street controlling the universe. But if they make it too low, then they dig their own grave. And the floor for what is too low is rising every quarter quickly. Not just because the TTM is about to explode, but also because the fair PE is about to explode. Whatever Digital Power Packs is doing in sales is like the fair PE for the Digital Power Packs revenue and earnings is much higher than the fair PE for GameStop as a retail business, because fundamentally the Digital Power Pack sales are not stuck to stores. They're not even really related to their stores. And the psychology behind the generation, the psychology behind why someone would buy a digital power pack is not tied to the psychology of someone shopping at a store, right? It's fundamentally very different. It's a entertainment product, it's a dopamine product, it is a wealth inequality product, it is a stress product, it's a gambling adjacent product. Nothing to do with, oh wow, I need to go to the store because I need clothes. I need to go to the store because I need dog food. I need to go to the store because I need the next Switch game. Like, it's not related to retail, and it's far more scalable. So again, the fair PE for that portion of GameStop's business much higher. So you think you know it's going back to 20 because it's always gone back to 20, but it's always has nothing to do with its fundamental price floor moving forward because it's always, look at it's always. Okay, just look at it's always with me. If you were to take their market cap, net of their book value, we'll just look at 2018 to now and say, okay, well, what if you take out all of the interest income, right? Which back then it was interest expense. But so you take out the impact of the cash, right? I just want to look at their operating income and let's envision their PE only as a multiple of operating income. So let's take cash out of the PE equation. Let's only value the business itself. Well, again, in 2018, if you were to take their operating only PE, it's nothing because they didn't have any operating earnings. 2019, nothing. Or in other words to say is infinity, right? GameStop, on a fundamental basis, you would say they shouldn't have even been worth negative 400 million back there, right? That's basically what you're saying. 2020, again, no operating earnings. 2021, no operating earnings. 2022, no operating earnings. 2023, no operating earnings. Okay, Q4 of 2023 is the first time GameStop even reported any type of earnings, and it was all on the backs of their cash, right? For the full year, 6.7 million in net income, but again, still an operating loss. So that's just a year and a half ago that those numbers came out, you know? So all this chart has nothing to do with what's the floor for GameStop looking forward, right? 2024, no operating earnings. Isn't that amazing? Right? They just flipped net income positive, right? For a full year of 2023. But on a quarterly basis, their operating business, a loss in Q1, loss in Q2, loss in Q3. And the Q4 gain was not enough to eclipse the losses from the prior 3 quarters. So they still had an operating loss in all of 2024. So again, how much is that a limitation for us at this point? It's not really. Q1 is the first quarter, Q1 of 2025, which was reported in what, June? Is that accurate? Let's double check. Yep, June 10th, 6 months ago, literally the first time ever that on a trailing 12-month basis, GameStop had operating earnings. I know it's been 84 years and we wanted it to go to the moon in 2021, and it would have on the backs of GameStop's technicals, on the backs of shorts having to close, but not on the backs of fundamentals. Fundamentals just reported a trailing 12-month operating income for the first time 6 months ago. So when GameStop gets crashed in June from 35 down to 22, again, on a forward-looking basis, you could say, man, they finally started looking really attractive. But on a trailing 12-month basis, you really want to buy GameStop at a 400 operating PE? Then Q2 numbers come out. That's the most recent earnings we have, right? Is Q2, which came out September 9th. September 9th, boom, earnings come. There's no crash post earnings because of the warrants. And so it keeps running up until the record date for the warrants, and then they crash it after that. But again, okay, we're at 27. Oh no, we're all the way down to $19.94. So how low did it get? Well, 1994, if you were to take the most conservative valuation you could on GameStop stock, then you would net out all of their convertible debt right now. Even though it's not due for 7 years, you'd say we're going to take that out of its cash value right now. And so if you do that, you would say they only had $5 billion in cash at that November 20th low. And that November 20th low equated to an $8.92 billion market cap. So that was the lowest low point they could take it. They being whatever, the nefarious Wall Street people that quote unquote control the stock. The lowest they could bring this post Q2 earnings was a $3.8 billion enterprise value on a trailing 12-month operating income of $102 million. So the lowest it got was $37.72 per share. Or sorry, a $37.72 price to earnings, or a $19.94 per share. The PE at this low, right, that feels so miserably low, was still a 37.7. A 37.7 was the low. That's the lowest in all the past 5 years. That's the lowest operating earnings that we have ever seen. The lowest, sorry, the highest operating earnings, the lowest PE ratio that Wall Street has ever been able to take the stock down to. They've never been able to take it lower than where it got November 19th on a operating PE basis. Obviously, the stock got lower in April 24. Look, the stock was down at $10. I'm saying if you take the enterprise value and you divide it by the trailing 12-month income from operations, you get their PE. Their PE at a 37, the lowest it's ever been. The lowest it ever got in this whole time, right? They didn't even have operating earnings for all of this period, all these years that we've been accumulating. They just got on the map 6 months ago. 3 months later, their operating PE comes down by an eighth or something, whatever the math is there. And in the this is according to the Friday after filing, you could get it at a TTM of 53 or a PE, right? Based on their operating earnings of 53. And at the deep low, November 20th, it got all the way down to a 37. So the question is, how low could they have taken it if they wanted to take it lower? Because we know that institutions actually did not rush in to buy at this dip. Institutions were actually net kind of flat over this most recent quarter, maybe even net sellers a little bit. Maybe they did not necessarily covet owning the warrants, and they figured, hey, after this record date, it's going to crash. So let's sell a little bit at this 26, and maybe let's buy in after the crash, right? I assume we will see some quite bullish institutional activity post Q3, and even some of this during November. But the question is, how low do you think it could have gotten? What's the lowest PE that you could have assumed was fair for GameStop? And I'm calling it an 18, right? After Q2, I'd say their floor fundamental PE. I'm not saying there's no way it could ever possibly for a day be lower, but I'm saying their floor PE around at 18 post Q2 earnings is the threshold at which I feel like all of a sudden GameStop doesn't exist in a vacuum comes into play. And why is that? It's really, using Best Buy as a comp, and Best Buy, sorry, it's probably hard to see that, but Best Buy at an 18 with declining everything year over year for many years, way more cost of doing business, and far less quality as far as management team, etc. I feel like if GameStop had gotten after Q2 lower than 18 PE, I think you would have seen a massive institutional buy-in and retail buy-in, right? And all of a sudden short squeeze risk, all of it, right? Cost to borrow going up, availability of shares for lending, all of a sudden drying up, right? Liquidity drying up, all of it. You didn't see that. So we know that after Q3 or after Q2, they could have brought the stock lower than this. Like it could have gotten lower than 1994. The reason I say that is because even though it got to 1994, we did not see the whole world dramatically pile into GameStop stock. I think if it had gotten to an 18 PE or a stock price of around 15, I think you would have seen that. Now you're probably thinking, wait, I thought you said kiss 20 goodbye. Why are we talking about it could have been all the way down to 15? Well, the point is, look at what's about to happen after Q3. Okay. You've got another 200 or so, 220 million in cash. And at current valuations, right? GameStop right now at 23.34, you're talking about an enterprise value of 5.2 billion, but their trailing 12 month is about to go from 102 million to 284 million. Their trailing 12-month operating income. Their current PE right now at 23, if I'm right about these numbers, right? So I could be a little high, could be a little low. We'll see. But if these numbers come out tomorrow, and right, these numbers, the earnings that I'm expecting for Q3, if these numbers come out tomorrow and GameStop is still at 23, then all of a sudden, that means GameStop's trailing 12-month PE is at an 18. So can they go for the lowest they've ever been able to successfully suppress GameStop to so far is a 37 PE. If GameStop stays at where it is right now, 23, you're already assuming that they will be able to compress that number in half, right? That they could essentially go twice as low as they were just a couple weeks ago. At the low, right? But what happens to the floor, like the floor PE that to me signals to the world it's time to buy this stock, right? What is like that threshold to where institutions would be piling in? In my opinion, that floor PE is rising compared to the floor PE after Q2. 18 after Q2, a floor PE of 20 after Q3. My fair value is much higher than these numbers. Okay. I'm just saying from a pessimistic view, like generally speaking, do I think there's going to be some run on the stock and then some pullback on the stock? Like, yeah, that's like every ticker in the entire universe. It doesn't move in a straight line, right? Higher highs, lower lows, etc. But range bound, technically stuck, can't get past 30, gonna get down to 20. I do not ascribe to that personally. And I'm trying to explain why, right? Sorry, I just got a text from my wifey. I'm live streaming right now. So back at it. Current PE, if the stock doesn't move, is an 18. I think that would already signal to all of smart money out there that it's time to buy in, right? If GameStop just stays at 23, I think that current PE is already lower than what I would describe their floor PE as in how could you possibly fundamentally support anything less than that? How could you justify less than a 20 when you would have just beaten earnings expectations by over 30% on the top line? Your very first quarter ever reporting digital power packs would demonstrate a huge amount of hugely scalable demand, 200 million plus in digital power pack sales, and that those sales are not tied to your stores whatsoever, right? So the PE that you get on that portion of the business, right? What do gambling related companies get as PEs? I don't know, maybe 89, right? For a DraftKings. You know what company we all love to hate that's been raving about their earnings ever since they added gambling? Robinhood. What's what's Robinhood's PE right now? Are you even going to tell me? 54. 55 to 89. There you go. There's your PE range for GameStop's digital power packs business. So the floor, if I'm anywhere close to accurate on my estimates for earnings, the floor PE for GameStop fundamentally rises dramatically, at least marginally. I'm only calling it a 20 because it's just one quarter, right? Let's see what they do in coming quarters, etc. But if you think the floor PE is 20, then all of a sudden the floor share price becomes 24, right? Anything lower than 24 after these earnings come out tomorrow would basically be a, hey, sorry, Wall Street, but there's going to be a lot of people buying. You're not going to be able to hold it down that far. If you think it's going down to 20, that means, it means the floor PE at that point, or the PE that you would give that business, is a 13. If you think GameStop is going to crush fundamentally, but simultaneously, you think that GameStop is going to end up back at 20 a share, right? And just be range bound, right? Just spend all its life hovering in the abyss of sadness. That means you think the PE is going to go down to 13, a third of what it was 2 weeks ago at those lows. A third of that. That's insane to me. But even if you thought that, you thought it's going to end up at 20 again, what happens after Q4? Well, look, we've got even more cash. Trailing 12 month goes up by another $114 million. Why is it going up so fast? Because the months that you're dropping off have nothing to do with the current business, right? When Q3 comes out, you're dropping off Q3 of last year, which was a negative $33 million operational loss. And so you're 33 million in the green before you even report a single dollar of profit, right? When Q4 comes out this year, you're dropping off Q4 of last year when you didn't even have the Switch 2 and you didn't even have digital power packs, and you were in the very first quarter ever of the PSA partnership. When you drop off Q1 of next year, again, no Switch 2, no digital power packs, very first Q1 of the PSA partnership, right? Just your second quarter of that going on. And so even if power packs doesn't continue to scale, your trailing 12-month operating income is going to grow substantially for at least the next several quarters, just if Power Pack stays level. And you know it's going to be at least more than level because Q3 is just in beta. Q4, it's technically still just in beta. And in Q3, they only had Pokemon and football. Q4, they've already added baseball and basketball, and they're going to add more things as well. So you know it's going to grow some. How fast does it grow infinitely? That's a good question. But trailing 12-month is looking so nice. And guess what happens? Your floor PE goes up. Your floor share price goes up to 32. Based on trailing 12-month, if you were to give it a 22 PE, then all of a sudden your floor share price is 32. Well, what happens if your floor is 32? Convertibles are in the money, right? Your convertible strikes are all in the money. $29.85 a share is your first conversion price. $28.91 is your second conversion price. So if you are at 32 as kind of your new floor fundamental value, well, and that's still based on a 22 PE, right? It's not like this isn't all just earnings multiple growth that I'm talking about. And even if you thought that PE was crazy, you said, well, I think it's only worth a 20. Guess what? You're still above the convertible strike price at that point. If fundamentally the company keeps crushing, the stock's going to rise, guys. Because GameStop doesn't exist in a vacuum and Wall Street's not infinitely powerful, you know? And if convertibles are in the money, and then after Q1 happens, well, guess what happens to your cash? Now 4.2 billion that you've been writing off as debt is now written off as dilution. So you keep the cash, but then your float increases. Well, if we're sitting at 23.34 a share after Q1 numbers come out in April, just 5 months from now, or sorry, Q1 will come out in June, 7 months from now, all of a sudden your cash goes up not just by the couple hundred million that you made during the quarter, but by another 4.2 billion in debt that's no longer being written off. And what happens to your trailing 12 month, right? Your trailing 12 month is continuing to increase by another 100 something million. If you're trading at 23, then that assumes a PE of 0.95. But what happens to your floor PE? It's continuing to grow. Why? Because you are growing. You're showing another quarter of continued execution, continuing to grow at insane clips, right? Just as they have been for many quarters in a row now, right? The change in operating income, the change in net income, right? Massive growth that the company's been accomplishing. You keep stringing more quarters like that, it's going to keep rising the appetite for PE, particularly also because the trailing 12-month portion, the portion of your TTM that's going to be driven by digital power packs is going to grow exponentially for at least the first 4 quarters of digital power packs earnings, right? Because right now there's 0 quarters with digital power packs in, then there's about to be 1, and then there's going to be 2, then there's going to be 3, then there's going to be 4, right? So the PE that you give that portion is high, and so your total floor PE is growing at least in proportion to the amount of your earnings that are coming from that business, because that business is not a physical retail business. The digital power packs business is not a physical retail business. So all of a sudden, well, guess what your floor share price is? 38. Well, if you're at a 38, what happens? Now the warrants are in the money, right? 32 was at the money for warrants, but if you're at a 38 and it's June of next year, well, you're going to see warrants be exercised. And again, if you think 24 is crazy, no way it's 24. I think it's still going to be stuck at 20. Guess what? Warrants are still in the money. And this is based on the diluted float. This is based on fully diluting out. I'm not talking about time value of money, right? I'm not talking about weighing the convertible dilution on a weighted average basis of the years remaining until the conversions actually happen. I am live streaming earnings, Andrew. And sorry, I haven't been active on the chat. But I'll be live streaming tomorrow for sure. Want to see y'all there. Let's see how we're doing, by the way. Have we gained any subs? No subs. That's okay. Hopefully we get 10 more before earnings. Let's not stay distracted though. So warrants are in the money, and 38 per share is already factoring in the $4.2 billion of convertibles dilution. And now you have warrants in the money. So what happens after Q2? Well, guess what? You've made another 250 million in cash. And now you have another 1.9 billion from the warrant money. So now your cash is at 12 billion after Q2, right? 10 months from now. No, 9 months from now, your cash is going from what people think it is right now at 5 billion. It is going to 12 billion. You have $7 billion in appreciation just from their cash. So if GameStop is trading at 23.37 9 months from now, that means you think their enterprise value is going to be negative 1.7 billion. You think their enterprise value is going to be lower than it was in 2018 and 2019, when literally everyone in the world was shorting this company into the grave, right? Everyone was against this company back then. What's up, John, today? Great to see you. And still, the market cap was only negative 400 million at the worst case. The enterprise value was negative 431. Market cap was 180, but when you net out their book, negative 431. Over here, we're not even talking about netting out their whole book. We're just talking about netting out the actual net cash. So you think they're going to be stuck at 20? You think they're going to be range bound at 20? Because Wall Street couldn't do this back when no one even wanted to own this company. Back when this company was a piece of crap, right? and had no earnings, right? And the management team was complicit, right? Incentivized to bankrupt the company. Trailing 12 month is going to be at 600, up from 500. And the floor PE is going to go up to at least a 26. So what happens? Floor price is 43. That's with the warrants already diluting. Well, what happens if $43 per share in the diluted float of 650 million shares? What happens? S&P 500 eligibility. Right now, the threshold for S&P inclusion is 22.5 billion in market cap. If GameStop accomplishes this, they will be at 27.7 billion in market cap as a floor, right? So again, for a day, could Wall Street tank it to 20? Sure. For a blip, that could happen. But those dips are going to be bought so vigorously quarter after quarter as the TTM is increasing and as the percentage of the TTM that's coming from digital power packs is increasing, right? And again, even if you think, oh, I still don't think it'll be a 26, even with it growing hundreds of percents year over year and 6xing their trailing 12-month, it can't be a 26. Okay, fine. It's still a 20. It's still 20. What happens? It's a $24 billion company still. So even if it's only a 20 PE, 9 months from now, after their operating income has 6x'd from what people are valuing it at right now, it still qualifies for the S&P inclusion. What do you think happens after it qualifies for the S&P 500, right? Bonafide qualifies, right? With no signs of slowing down. It's like up and to the right. is what happens. Up and to the right is what happens. Anyways, very exciting. These are what so anyways, let me take a pause there. Let everyone digest that. I might go on another little rant, kind of stock talk, back up and talk about kind of my expectations, not just talking about the floor, but I wanted to share what I just shared to hopefully illustrate the fundamental floor of GameStop rising very aggressively over the next few earnings, right? This earnings comes tomorrow. Does anything explosive happen? Again, I'll talk about expectations in a second. We'll see. It's certainly possible that explosions happen. But as far as the floor goes, the floor starts rapidly increasing as far as the PE. And if you think it's going to be stuck at 23, that means that you also think that the enterprise value can go down from 5 billion down to 4.8, down to 482, down to negative 1.6 billion. That means you think the PE could go from the lowest it's ever been in the whole 5-year window. The lowest they've ever gotten the PE is to 37. If you think the stock is going to be stuck at 23, that means you think the PE is going to go all the way down to an 18, and then to a 12, and then to a 0.94, and then to a negative 2.7. I do not think that that is possible for more than a split second in time. I do not think we will be range bound stuck near 20 forever, because Wall Street is not infinitely powerful and stocks do not exist in a vacuum. The last thing I want to say about this before I head over to the chat, if you felt that Wall Street is infinitely powerful, that the entire world is complicit, that you have no opportunity to fundamentally impact the value of your company, then why would you own any stock? Particularly, why would you own GameStop? Why would you not just buy whatever companies you think that Wall Street wants to go up? If that's all there is to it, right? Wall Street gets to make all the rules. Wall Street gets to set the price. Wall Street is self-regulated. A lot of this is true within boundaries, within reason. I think Wall Street is corrupt. I think they are incredibly powerful. I think that regulators are complicit, but there's still limitations. It's not infinite. That's my point. If you felt that it was infinite, like if you think it's in the cards for GameStop to be trading back and forth at 23, 24, 23, 22 for a month, 2 months, 3 months after Q2 26 numbers come out, I just think, why in the world would you own this stock? Like, what would change about your worldview? Like, why would they ever let, quote unquote, let GameStop go up? If you don't think, I just don't, I think if you own GameStop, you must either believe that GameStop has the opportunity to increase its enterprise value and its market value no matter what Wall Street wants, either through its fundamental outperformance or through whatever technical tools and mechanisms that you think GameStop could or might use one day, right? If they issued a crypto dividend, or like all these different kind of rug pull moments, they bought all their shares in DRS, if they delisted the stock, if they spun it into two stocks, right? All the tinfoil of the technicals. Either you think that GameStop has the technical tools to beat Wall Street at its own game, or GameStop has the fundamental tools to beat Wall Street at its own game. If you think that neither of those are true and that Wall Street is infinitely powerful and that they want the stock at 20 and they can't let it go past 32, why would you own it? Unless you own it as a portion of your portfolio simply to trade, right? Like, I don't believe in it. I don't think it can go up again like it used to. I'm just going to sell the peaks in the 30s, buy the dips at the 20s, and I'm just going to rinse and repeat for the rest of my life as kind of a simple trading strategy, a way to generate income. I would totally understand that strategy. I would respect that. But if you're a long-term holder, I don't know why you would be a long-term holder if you felt that long-term GameStop did not have the ability to achieve outperformance on its stock. And what I'm telling you is they do. They do have the ability, and it's coming. All right. Let me pause now for real. Hit the chat, and I'll talk a little bit about what I think is going to happen with the stock. But let's see if there's stuff that y'all want to talk about too. How y'all been doing over here? We got 100 of you guys in here. I've been talking for an hour. Holy smokers. Holy smokers. What's up, guys? Man, got some appreciation from my hard work. Thank you. MT Sklar. I'm sure you said that an hour ago. Sorry, guys. Proselytize is heading out or headed out a long time ago. What's up? Oh, we want to talk about the ice cream. Ryan Cohen did tweet a picture of ice cream, and 7 of them were covered with sprinkles. Yeah, I haven't talked about the GameStop warrant ticker itself. Obviously, that ticker could also squeeze and or be leveraged by GameStop and or by Wall Street, one way or the other. Right? There's more battlefields for interested parties to fight on now, which I think probably works in GameStop's favor. What else? The Punky says the floor is lava and the ceiling is glass. I like that, Punky. If you're still here, that's nice. I like that comment. Yes, Q3 numbers will show digital power packs, and we will be able to distill pretty accurately their revenue and margins, even if they don't tell us. I think they will tell us. I think there's a good chance they will tell us, even though I think digital power packs, I don't know. I think there's a good chance that they are still reported within the collectibles line. I don't think GameStop will necessarily split it out that thoroughly, right? To show hardware, software, collectibles, digital power packs. I don't think they will split it out to be its own line. Partially because I do think there is some overlap between their graded card business, right? They're just the graded cards that you can buy on their website and their digital power packs business. I think there's overlap there to where it would be hard to split them totally separately. I do think it's still possible that on their presser, they say, hey, we did 1.3 billion in sales. One highlight, note from management, like, hey, this was our first quarter of digital power packs, and digital power packs represents, 180 million of the 1.3 billion that we did. Right? I think that's totally possible. I don't think they will tell us the margins, but we'll be able to solve for it if they don't. But they might even tell us the margins on them, which would be exciting. But we'll know something. We'll know a lot more than we know now. Right now, like, I'm modeling 10%. It's not quite a shot in the dark, but it's totally an educated guess. Like, it's not like, we don't know how much are they paying for their cards before they sell them, right? They could be paying 95% of market. Like, reports of GameStop going to trade shows and just buying out tables. They're probably paying a good amount of money as a percent of market value of those cards, but then they're able to sell them for a bit of a premium, either through their own online store or through the rotating multiple sales with digital power packs. But that would obviously compress margins. Also, how much does GameStop owe to PSA for the partnership, right? Huge factors. But then on the other side, how much do the card values appreciate in value while GameStop is holding on to them, right? I'll talk about the ice cream tweet in a minute. Let's see. Punky says, I'd rather wait and fly to the moon based on fundamentals rather than technicals all day, every day. I definitely hope that GameStop sends it. Like, I hope that GameStop goes, quote unquote, to the moon. And I think there is a real possibility that as the fundamental value rises the floor of GameStop, that one day it shoots up 300%. Like, it could force the squeeze. It could force the stock to finally trade at its technical value, which is who knows how high, right? How high is the highest of heights? That's the question everyone would love to know. At least for the portion of your shares that are dedicated to scaling Mount Everest, to reaching Valhalla, right? Some of your shares might be right now there for downside protection. Some of your shares might be there for swing trading. And those shares, as GameStop eclipse massive price targets, you should probably trade. If they're there to be traded, you should probably trade them, But if they're there to be held, you should probably hold them, But if we never see the explosive boom, you can still sleep well knowing that the fundamental value is it's looking real bright. It's looking real bright. I mean, the way I just modeled it basically is like the lowest, like the share price 9 months from now, right? These numbers get reported in September of next year. 9 months from now, I'm expecting anything less than 43 to be like a huge buy signal for anyone out there. It doesn't mean it won't ever any single day be lower than 43. But again, the fundamental value is rising a lot. Of course, GameStop has to execute. If GameStop doesn't execute fundamentally, that changes this conversation, right? But I'm saying if you think GameStop's going to execute well fundamentally, then to me, simultaneously, you also need to start building the expectation that, yeah, around $40 is like kind of the floor. And I also think that just back to the napkin math checks out with the warrants that GameStop issued. GameStop issued the warrants at a 32 strike for October of next year. If GameStop thought that in a medium to good case scenario, they will be at around a 32 or a $34 per share a year from now, they would not have issued those convertibles, those warrants at that strike. Because the warrants when they issued were worth almost $5 per warrant. I mean, some people say 2 or 3 or 4. Kind of depends on your brokerage to a certain extent. Let's just call it 4. That's what they're worth right now, $4 per warrant. So GameStop thinks that their shares would probably be worth at least probably 40 come October of next year. That's probably like their floor of what they think they could target as a share price in order for it to make sense to issue a 32 strike warrant, because it'd be weird for them to issue warrants and for all of their shareholders to be screwed if they hold the warrants, right? If you hold the warrant and the warrant doesn't convert, then in retrospect, you would say, man, I should have just sold it. I should have just sold the warrant right away when I got it and then bought the shares or something, right? If the shares are any less than 36, right, 32 plus the $4 premium, then you should have just sold the warrant. And as management, it just doesn't make sense to do something that leaves your most bullish investors feeling a little bit bad, right? It doesn't really make sense. Let me know if if that explanation was confusing. But whatever share price GameStop trades at 9, 10 months from now, if you were to subtract out the value of the warrants at the time they were issued, like you take out $4, then mathematically you would have been better off having sold the warrant and then bought the shares. And that leaves a mixed bag impact on your shareholders who held the warrants expecting to convert them, right? If GameStop's at 33 a share in October next year, okay, here are the warrants. You can now buy shares for 32. Well, guess what? That warrant's only worth $1, right? The difference between 33 and 32. So you should have sold it for $4. Instead, you held it and it just decreased in value every month for a year. That's not a good vibe, right? So you want the warrants to be worth more than when they were issued if you're going to issue them, and you still want them to convert. So I think GameStop is targeting no less than, like, break even would be at a 36. $36 a share would be like the break even price if you exercise the warrants at October, or if you had just sold them and then bought shares in October. So I think GameStop would want to be above a break even, right? I think they probably target at least a 40. Just from a management perspective, I think they probably thought we'll probably be at least at 40. We can issue these at a 32 strike. And again, the math says, man, if they're not in the 40s, all the world's money is going to be piling in. And by the way, they don't even have to be at 40 to still be eligible for S&P 500 inclusion. They only have to be at a 30. What do they have to be at, actually? What's like the threshold? About a 35. About a 35 is what they need to be included in the S&P 500. And so again, there's just even more cushion there. And as they approach that conversion threshold, that's going to add some bullish momentum on the stock as well, as it does for every other company. And then you just add in the dynamite impact that shorts being short the company could have on the company. Let's see. What else am I missing here? And yeah, of course, the warrants can be extended. So that adds a wrinkle of value to the warrants. But again, you wouldn't necessarily issue them if you felt that it was likely you would have to extend them. Because again, it's just a mixed bag, mixed emotions on how that would impact those who held them. If you have to extend them, that means they're definitely worth much less than they were when you issued them. What's up, Bateau boy? We are out here live. What's up? Justin said, you want the subs. You can't handle the subs. Thanks, Justin. What if I can? What if I can handle it? I think I can handle it. I don't know. Okay, so a little bit of, we can talk ice cream and we can talk earnings my expectations of earnings in the stock post earnings. What else? Just in case, says Wall Street is no longer visible. The real Wall Street is now the thousands of unregulated family offices. Yeah, totally. I mean, Chubwa says, dang, 100 people in here, you're getting famous. So Justin says, I can't handle the subs. And Chubwa says, I'm getting famous. So what side of the coin y'all want to be on? I don't think I'm getting famous, but hopefully I'm providing good value, trying to make this, I'm trying to educate not only you guys, but also to educate the uneducated out there in the corners of the internet who, through the channel growing, might come into contact with the GameStop story and otherwise might not have. And my hope is to present the story in a way that's level-headed, that's calculated, it's analytical and fundamental, so that traditional investors and old money, level-headed, not not hopium, not tinfoil, not apish people, not degens, could look at this company and see its value and begin to allocate higher portions of their portfolio to it, you know? Kiggy says, love the live stream. Thanks, Kiggy. Oh, Justin also said short selling is, well, Ryan Cohen said short selling is un-American and that those are fighting words. I agree. I mean, regulation coming down on short selling, that's the long tail, like tailwind for GameStop achieving its technical value. But, I wouldn't lose sleep over any day now. The US is finally going to crack down on short selling. I think they probably would if they could, but I think with the grave that has been dug with GameStop shorts, I think they are forced to enable it for decades to come, at least a decade to come. But I can imagine that the US administration might start to feel like we can't let this happen again, but it's going to take us a long time before we get out of, the grave of what's already happened with the massive unrealized losses of GameStop shorts that piled up in 2015 to 2018. RC is quoted, I don't know how to say this, Ivioki says, Ryan Cohen's quoted saying that him and the board go for ice cream after deals, etc. Okay, I'm going to talk about the ice cream. Going to talk about it. Aaron says, what's up, man? Been watching all your GME vids. The level head analysis is great. Thank you, Aaron. Thank you. Thank you. Yeah, big volume candles. It was kind of fun. Andrew says, I think the fuse has already been lit. Chuba says the value of my channel is great. Thanks. Henry, you got to cut that out, bro. Henry says the new age DFV. Look, I'm not trying. To me, comparing me to DFV is like stolen valor. Honestly, like I'm not in his league, But I do look at spreadsheets and I like fundamental value. So like I could be like a third cousin twice removed of DFV, but even that feels like that's too great for me, I can't take that praise. I don't want to steal his valor at the end of the day. Maciel says PMO on Roaring Kitty just crossed. Henry says maybe he's watching right now. DFV, if you're watching, thanks, bro. Thanks for what you did for this company and what you did for me as an investor. I appreciate it. Honestly, like, y'all joke about like I'm famous now, whatever. Like I'm genuinely not famous. I'm very not famous. Although y'all saw I was covered front page of the Guardian. That was pretty cool. That was really me. Some of the haters in the comments are like, "Are you even a financial advisor?" And then it's like 1 week later, "Oh, he's on the cover of the Guardian. Maybe he really is in the financial industry." This Jeremy guy. What am I saying? Oh, geez. Oh, the starstruckness I would feel if ever one day, due to me covering GameStop's fundamental value, like if that ever led to an opportunity to get to have an email exchange or a Zoom call or get to meet any of the greats of the story, like DFV or Cohen, that would just be like crazy. I'm not like expecting that at all, obviously, but I would like giggle so much going to bed that night. Like I can't believe just got to meet those guys, So let's check out the warrant ticker and let's check out, someone else asked how many subs away from 2525. So we'll check that out as well. Yeah, pretty fun. The warrants have been moving pretty nicely, right? Battleboy says, how about Roaring Sensei being a GameStop investor? Misso says, I really like your style of covering GME. You're giving legitimacy to finding a good valuation within the company. It's nice to see someone look at the balance sheet and dive into actual numbers. I appreciate it. I appreciate it. Henry says that I should be hired by them one day. Yeah, that's another cool thought, like employment opportunities. I don't know if I want to be employed by Cohen though. He seems pretty tough to work for, honestly. He's like kind of like, I'm a full-time entrepreneur, so to think about work, like having a full-time job is like, dang, I don't know if I want to go back to that. But that's the one company, like anything under like that's, I would consider it, obviously, if it came from a multi-billionaire. Like, you got to figure the opportunities would be a little higher. So we are 9 away. 9 away. Punky says, if you don't want to have a boss, you have to be a boss. It's true. It's true. I'm getting better at being my own boss. I used to be a pretty bad boss. I mean, it's just hard to start a company. Well, maybe not for everyone. It's hard for me. I had a lot to learn. Okay, let's go talk ice cream tinfoil real quick. And I won't have anything that exciting to say about it, though, to be honest. And then I'll talk my expectations for the stock post earnings. Oh, we already did that. Cohen. Okay, so this is the picture in reference. Ryan Cohen posting on his X account some ice creams. 1, 2, 3, 4, 5, 6, 7 with sprinkles. 1 with not sprinkles. So, anyways, I think it's pretty clear that he is in a GameStop store, right? I mean, assuming he took this photo, he might not have taken the photo, but it looks like this is a GameStop store associate that's in front or behind this counter, however you would say that, and that's a little GameStop fridge with some GameStop merch. I don't know. But as far as like, why does this excite investors, right? If you're listening to this live stream and you're like, why are they talking about this ice cream? There's a couple just like 2021 references within this ice cream. One is the reference of 741, which back in the day, Ryan Cohen tweeted a couple times at 7:41 p.m. in consecutive days, which led to some speculation that 741 might be a meaningful number. And there's some different like IRS laws that came into play with that. The Grape Ape says he doesn't think he's at GameStop. Okay, so maybe he's at the corporate office. I mean, he's not like at a random place, I don't think. But maybe he is. Right, maybe he's just at a restaurant with some GameStop associates. But anyways, the 7-for-1 reference, some people have thought it's a stock split, whatever. So to me, he's just kind of like tickling the tonsils. Like, hey, look, they're 7-1 because he knows we like that stupid stuff. It's a soft serve place. You can tell by the ice cream in the top corner. Okay, so he's at a restaurant that serves soft serve. Fair enough. Mr. Softies. Is that a real place? I don't think it really matters, but Mr. Softies. Grapevine. Mr. Softy, DFW. Maybe so. I don't know. Is it just... It doesn't look like a food truck, though. But it could be. I mean, is that the logo right there? Mr. Softy. Yeah. I mean, it looks like it. With the little ice cream thing under it. That little ice cream head is right there. I don't know. It doesn't look that similar. Anyways, he's at a soft serve place. Whatever. The other reference is in 2021, he tweeted a picture of a frog with ice cream. Reference of, and that got tied to basically, is there a new company he's starting? Is there a success that he's celebrating? right? He's talked about, so like as someone mentioned in the chat, um, celebrating successes with ice cream. I don't like. He also in one of his Teddy books. Like I own several of the children's books that he wrote, and my kids love Princeton and Kingston. And one of them, Grandpa takes them to an ice cream shop, which is a McDonald's, and they get ice cream. Right? It's like definitely a formulative childhood experience for Cohen, heartwarming, and something he's taken into his tenure as a corporate executive, not to reward with like lavish vacations or like what the types of luxurious rewards that a lot of companies would do, but to say like, hey, let's go to a McDonald's and get an ice cream cone. Like the simplicity of that, I think is very attractive to him. And so, anyways, what is he celebrating? Well, he posted this on the 7th, the day after GameStop's Trade Anything Day, which he posted either like right before or after. Yeah, the next day. So obviously, a lot of GameStop employees had to work extra hard this day. A ton of people coming in. I think basically, to me, this just means trade-in day was a success and cheers. And it could be a little bit of preliminary, like, hey, Q3 is about to drop, right? Cheers for the company reporting its Q3 earnings. You know, either, I mean, no matter what, it's a good vibe, but I don't think there's like a deep level interpretation to like he's really saying this. Noodle. So, anyways, that's just kind of my general thoughts on the ice cream post. Why is it talked about? And it doesn't mean that something explosive is not coming. Like, hey, guess what? We bought this new company, or we have 2 tickers now, or whatever. Like crazy news that drops. Even if crazy news dropped, I don't think we would look back and be like, we should have known that's exactly what was about to happen because 7 of these had sprinkles and 1 of them didn't. Like, I don't think that's I don't think this is a clue for something specific, but I do think it is a clue that we are in for good days ahead. Like, I do think it's definitely positive vibes. And I think it would be very silly to send out such positive vibes that also allude to the 2021 hopium days with if you thought that the stock was in for a crash, right? I think you would expect that the stock is ready to reflect some of the fundamental outperformance that you've been achieving. And so, if anything, it's just a signal that there's good stuff coming, you know? Osmo size says, no way he posted ice cream without there being a significant reason to do so. And again, I kind of agree. Like, I think it's a relatively significant signal for a relatively significant good news, good earnings report, upside, good performance on trading day, right? Trade-in day. And even this trading day, like it could be a signal that this trade-in day was more impactful than what people might think. Like when GameStop first announced their PSA partnership in Q4, it's like, okay, cool. Like you can get cards graded here, and it's a little cheaper to do it through GameStop than through PSA. So that's cool. That's like, that'll be a couple million a quarter. Like that'll continue moving the needle. No brainer. Like that's pretty cool. And then all of a sudden, a couple quarters later, and it's like, wait a minute, this is epic, right? This is huge. Like this is blowing up collectible sales and profits. And how far could this partnership go, right? All of a sudden, it's like, well, this is bigger than we realized. And so, anyways, it could be that this trade anything day, I've seen some speculation of like that GameStop is the at a surface level, it's like it's free press, brings more customers in the store, right? It's kind of fun, right? But at a deeper level, it's like, wait, what if this was more than just marketing and customer acquisition? What if GameStop is really tracking and interested in growing their trade-in business to expand to other types of inventory beyond just video games? Like, what if they want data on what are the types of things that people like to trade? What are the types of things people like to sell? What are the types of things that people value, collect, etc.? Right? And could that actually be a huge fundamental step in GameStop's transformation, continuing to grow their scale as a retailer and continuing to shift away from their dependence on the cyclicality of the video game market and the general downtrend of the physical uh, game industry, right? They still have even in this picture, right? A whole wall is still physical games, and it's like, man, let's get some of the physical games online, right? Like you can, if you want a game, just go check their inventory online. Let's give some of the shelf space to maybe different types of collectibles that all of a sudden they become the record store. All of a sudden they become the trading cards store. All of a sudden they become the enthusiasts, the gamer, the collector hub, and they really leverage their trade-in competency in a way that no other nationalized retailer comes close to. Anyways. So as far as the ice cream tweet, I do think it's possible that what he is celebrating is trade-in day, and that the signal is actually pretty substantial that this means more right to us right now than what you think. Just like when they announced their PSA partnership, it meant a lot more than what people thought. You know, so those are kind of my thoughts on the ice cream quote. Okay, some people asking for me to recap my earnings expectations. I will do that in a second. And Noodle still asked me if I have checked out Reach and Formal's forecasts, which I have. So I will touch on that. So earnings expectations for me are right here. So balance sheet expectations are right here, but earnings are really more important in the near term than the balance sheet. It doesn't really matter if they keep all their cash in cash or if they bought more inventory with cash versus buying inventory with accounts payable. Like none of that's like that important on the near term. But I have 1.3 billion in sales, 625 from hardware, 205 from software, 475 from collectibles. Of that 475 in collectibles, I am modeling about 200 million of that to come from digital power packs. Overall, gross margins at a 27.42%. Why the margin decline quarter over quarter? Because of digital power packs. So I have digital power packs. I have modeled, there's Q3, at a 10% margin. So 200 million at a 10% margin, and the other 275 coming from their raw cards and graded cards businesses. Overall gross profit of 357.9 million, SG&A of 209, for operating income of 149 million. Interest, so 93 million coming from cash interest, but a $9.3 million loss in Bitcoin. So you add these together, I just took out 5 million for taxes, net income of $227 million is what I'm expecting for Q3. That equates to a 50-cent per share undiluted EPS, or a 37-cent diluted EPS number. So that's what I'm expecting. We'll see if I'm right or wrong. I think that the revenue lines are plus or minus 25 million accurate. Sorry, 50 cent non-diluted, not 56. Chubwa. But so I don't think I'm very off on any of the revenue lines. And yet the net sales, technically it's being reported that net sales expectations are somewhere like 985. So it's like, man, you think they're going to be 30% higher than that? That assumption really I do think they'll be higher than 985 regardless, but it really comes down to Ryan Cohen saying collectibles will be about 33% of full year sales. And I think if I'm high or low in Q3, I think the implications are just that much more impactful for Q4. So if collectibles are only 400 million in Q3, it's like, well, dang, I guess they're going to be 700 million plus in Q4. Or Ryan Cohen was way off and lying. Like those are the only options, and I don't think he's way off and lying. To say August 20th, he said that. He's not talking about we're developing a new, prescription drug that in a year from now will be able to cure cancer. He's like, no, right now, literally right now, okay, there's only a month and a half left in the year. I'm telling you, collectibles are just about a third of sales. So like for him to be way off on that would be preposterous to imagine, So anyways, if I'm high on Q3, it really just means I'm low on Q4 as far as their collectible sales. And software and hardware are somewhat range bound. They're not going to be infinitely high. They're not going to be ridiculously low. It's pretty known with some level of discrepancy. So collectibles revenue, I don't even really care if I'm too high because it just means I'm too low in Q4. The huge X factor that is so unknown is what are the margins for their power packs? I have it modeled at a 10% margin for their power packs, which is what gets you this 358 at gross profit. Am I too high? Am I too low? I think it's more likely I'm a little low. I think it's more likely it's like 12%, or if it could be even 15. I don't know how it could be more than that. But it could be more than that. What's up, Skybike? What's up? YouTube hates free speech. What a tag. So Region Formal did numbers. They kind of gave out two different earnings. So their like official earnings projection, I think they had net sales closer to like 1,050 million, like 1050. And then they did a second one that's like, but if Power Packs is actually doing, a lot better, then here's what I think it could be, right? And kind of did a second one. But their official one is much lower than mine. And I think they kind of realized that, man, with Cohen's, with the statement Cohen made on October 20th, it's just hard to like discount that, Okay, Noodle Soul put it here. So Region Formal has 26 cents of diluted EPS, or 32 cents basic. And he kind of adjusted that or put a second one out. I don't know if he made his second one his official estimate or just kind of put both out. But the revised versions, he says 36 cents basic EPS, 32 cents diluted. So it's like very, like it's a lot lower than mine, and I think ultimately our hardware and software numbers are pretty similar as you broke down their projection. And really, I'm just much higher on collectibles. And the reason I'm much higher on collectibles is because of that interview with Cohen. Like before that interview with Cohen, I was closer to 300 in my estimate for collectibles. And after the interview, I raised it to 500, came down to 475. So that's really the difference between me and Region Formal. I'm a little higher on software than Region Formal, or sorry, on hardware. I think our software is actually closer to identical. I think hardware I have a bit meaningfully higher. I think Region Formal models a decline in hardware, mainly based on Nintendo's Q3 report that they sold fewer Switch 2 units in Q3 than in Q2, which I also decided to adjust, but I basically have Switch units flat, but then accessories and used consoles continuing to grow. So again, we'll see. I'm like, this is my first time trying to predict what's going to happen. I spend a lot more time analyzing what we already know has happened and then kind of projecting the big picture of what is likely to happen. I haven't in my history spent a lot of time modeling the detail small future of this is precisely what I think will happen in this 3-month window of time, because it's not nearly as important as understanding where we're going in the 3 years time, 30 years time, right? 30 is a little tough to model, but if you're right on the 3-year trajectory, it doesn't really matter how much of it falls in this specific quarter. You know what I mean? Um, so yeah, OGV says that Region Formal has 1040 MIO. You mean like their top line? I don't know. So, anyways, if Region Formal ends up being correct, that's cool. You know, I'm not trying to hang my hat on I will be the most accurate. I'm trying to do it the most accurately I can, but I don't really base my estimations off of like, oh man, someone else estimated this, so I must be right or wrong. Like, oh man, I'm way off of the mean. Like here's the plot of all the earnings projections, and then I'm over here, you know? Like, dang. And so to me, I'm like, I made really long videos for each of these numbers, some of them multiple videos just to pick one of these numbers. And I'm glad I wanted to record the reasoning and the process so that I can watch them again and again as I'm thinking about Q4, to see what of my reasoning is accurate, what is off. But I'm reasoning based on my reasoning. I'm not just like trying to place something in comparison to someone else and structure it that way. So again, on an EPS basis, I have 50 cents of EPS undiluted or 37 cents diluted. So, much higher than much higher than kind of the Wall Street mainstream media consensus, and still, 30% or so higher than even Region Formal, who's an active GameStop Redditor. So we'll see. I'm either going to be living on a private island that I bought for myself, or I'm going to die alone out there on an island. We'll see if I'm castaway or if I'm somebody. you know. So my expectation. Let's talk about my expectations for the stock. I think that the stock will go up, but like I started sharing here, I don't think the floor becomes explosive until after Q4 numbers. Skybike says, either way, Island Life. Yeah, baby. Me and Wilson, we going to be doing just fine, dog. I think after Q4, the floor is lava becomes like really volcanic, explosive lava because of the implications for the convertibles and the warrants and the S&P, which are all tranched just so close to each other, right? I think whether or not that's eclipsed after Q3 really comes down to how strongly do markets react to digital power pack sales, which might come down to how much does GameStop disclose about their power pack sales. If they don't actually say anything about it and it's all just hidden within the numbers, yeah, we can solve for it. So we'll still know. So you could still be a buyer of the stock based on the fundamental future outperformance. But on a trailing 12-month basis, if they don't tell us much about power packs, I think it's less likely that the Q3 alone ignites the stock in a super dramatic way, in a way that's sustained. I think it will be a blowout quarter. I also think that the stock has been held pretty tight, right, over the past quarter, right? For it to be trading in the 22s and 21s, I think was surprising for a lot of us, even this past quarter. So does it seem like they need to let some steam out? It does. And so does it end up, you know, like what does it top out at as the like reaction to the numbers? I think I think it probably does still hit a ceiling. Maybe the ceiling becomes slightly higher, right? Could they touch 38 or 40? I mean, that would be awesome. I think that's possible. I don't think it would stay there. I don't. I think it will come back. I think it will spike to something, right? And I don't really even like making predictions about the stock because the stock price is not the truth. The fundamentals of the company are the truth. But the fundamentals would say that, like, the fair value would say that once this number comes out, you can really start to justify a higher PE, higher growth rate. Like you can start to model the earnings from digital power packs. And it doesn't take a genius if the numbers start out super strong for digital power packs, it doesn't take a genius to see that they're going to get stronger as more and more users get in and as more and more product lines get in. So I do think it's possible that all of a sudden like 30 is the line that's held, right? Like all of a sudden we're like, whoa, we broke out of the glass ceiling, right? We're finally sustaining something that's around or above some of these tranches. The only thing is, once, as someone comments, as well, this video I referenced, with Divi, he said like, hey, they can't, what did he say? They can't let it hit 32 due to warrants. So again, long term, I spent a long time at the beginning of this live stream kind of like debating that rationale. I do think short term for this particular quarter, in light of how many implications and dominoes exist on the other side of 30, right? From the convertibles to the warrants to the S&P, I do think it is almost like the last quarter possible that if shorts wanted to do an Armageddon on the stock, they could. They probably could. Now, a couple other interesting tidbits are that January is the 5-year anniversary of the sneeze. Are there any swap related or short related or unwinding related activities that will come due in January, February, like a month or two from now? I also think that's totally possible. If that is the case, you would kind of expect that it's almost more likely that the stock is indeed hammered at some point post earnings. The other question is, does GameStop issue another warrant? And again, I would say I think it's more likely than not. I'd put it at like a 70% chance. And so if they issue another warrant, does that immediately tank the stock in a harsh way? Well, it didn't last time. But what it did do was run the stock leading up to the record date for people that want to hold the warrants, but then they crashed it after the record date. So again, again, if they issue another warrant, does that also give some more leeway or leverage for another flash crash of the stock? I think it does, but that would add that much more, I don't know, magma activity in the lava of the volcano. Like I guess it's not lava when it's in the volcano, it's lava when it's outside of the volcano. It's called magma when it's inside the volcano, I think. Thinking about my boys' science lessons right now. What am I saying? If the stock does run up to a 30 or a 35 or a 40, I don't think it's to the moon from there. I think it's a signal that it will be attacked down. Does it get down all the way to 20? I think if it does, I think it's possible that it could, but I don't think it will stay there. Do warrants signal that it could be attacked post record date? I think it could. It doesn't mean it would stay there. Does the January 5-year date from the sneeze mean that the stock could get hammered, that shorts need to get the stock super low? It could. Again, it doesn't mean it would stay there. And all of those things happening simultaneously, to me, would be more and more bullish indicators that it is actually, the stock is about to launch for real post whatever, like January, right? A DFV comeback is really coming, right? And would the launch happen right away in February, or would it happen after the numbers are reported in Q4 and trailing 12-month goes up by another 30%? And all of a sudden you're at the convertibles price like that. The storm really erupting and catalyzing, I think, is more likely after Q4 for all those reasons. But it could be now. There are some signals that Q3 is the catalyst, and that it actually runs leading up into all of those things. That January is actually even more explosive because shorts actually lose control before they're able to swap. That DFV adds hype to the momentum before we even get to those dates. That Q3 numbers, basically the question is, what is fundamentally possible? It's possible that the big money of the world sees the digital power pack sales and basically immediately values it accordingly, right? You take that number and you start looking forward, right? You extrapolate that into future quarters. You start looking at the margins that they get on it, the scalability of it, and all of a sudden you fundamentally revalue the business, right? The retail business all of a sudden gets a fundamental revaluation closer to a 24, maybe even a $60 billion value. That could, like, digital power packs is the linchpin and the launch board by which the fundamental repricing of GameStop's retail business will happen. It is digital power packs. The fundamental repricing of GameStop's asset management business, it doesn't really look like I don't think that will happen until some cash deployment momentum or spinoff starts happening. And so cash, to me, is going to keep being valued at something like a 1.0 or 1.1 net asset value. But the retail business valuation, like how do the institutions view it? How does the world view it? It could take a huge bump in the right direction, and again expand the PEs that it can justify as well. So I know I'm kind of talking myself in circles. Basically, if we're looking at GameStop's chart historically. I started this whole live stream talking about the fundamentals on a trailing 12-month basis. If that continues to be, if that is the way that GameStop is priced, which it's not really, we know that that isn't the only control, like the TTM fundamentals are not the controlling factor of the stock. Because if they were, the stock wouldn't have been as high as it was over those years. But is it a controlling floor of the stock? We'll see. But if the trailing 12-month fundamentals only serve as a floor, well, then the floor gets raised to something more like a $24 per share floor. And the momentum post earnings would almost certainly send it higher than a 24. Maybe hits 28, maybe 30, maybe 32, maybe 36, maybe 40. The higher it gets, the more likely it crashes to me, because the trailing 12-month isn't ready to support 40 yet. But the reason why I don't say for sure it would crash, and by crash, I mean just back down to that kind of $24 per share price. If it crashes lower than that, right, to the 21, 20, 19, 8, like, then to me, that would signal that the $100 per share plus, like the reckoning is actually around the corner. So again, if you're a long-term holder in GameStop, should you sell if 2 days from now the stock's at 40? Well, if you're a long-term holder, you know, like, okay, well, what do you think it's worth right now? Right? And if you think it's worth about 40 and it touches 40, then maybe you'd want to trim. I don't know, depending on your weight. But if you think it's worth 110, or if you think it's worth 330, or if you think it's worth 145, then should you really sell any at 40? Particularly if you think the reckoning for that price appreciation is essentially imminent in the subsequent quarters. I mean, probably you wouldn't really want to sell if you think it's coming that soon. It just depends on your tax strategy, but you might just want to keep it in there so that you can sell for long-term gains whenever you sell one day, rather than sell the peak, buy the dip, hoping that it dips. But if it gets to 40, I would say it's pretty likely that it dips, you know? But if it but it's also like it's a double-edged sword, because if it gets to 40, it also becomes more likely that it rips. Like, it adds pressure, it adds volatility, it adds technical momentum, it adds retail hype going into Christmas season. Everyone's going to know, right after these numbers are reported, everyone's going to know Q4 numbers are going to be better, dramatically better. Everyone knows that, right? So the hype from Q3 could also trigger the hype for Q4 even before the Q4 numbers are reported. So again, could this be the moment that the stock breaks out of these $32 ceilings? And basically what I'm saying the floor scenario is for the coming 3 quarters, like, is it possible that GameStop accomplishes that in just a few weeks, right? Based on the Q3 numbers, yes, it's totally possible. Yeah, WR Jonas, yeah, the whole Robinhood thing. I'm costing Robinhood money. I'm not supporting them, but I do like their charts. My hope, honestly, is that one day they sell themselves or go bankrupt through lawsuits, and then someone ethical can purchase their UI. Like, I like their UI. I just wish they weren't owned by devils. But anyways, fundamentally, GameStop can already support a $43 per share diluted share valuation, right? That's a valuation of 27 billion. GameStop can already support that on a weighted average basis just as a retailer. Just as a retailer on a weighted average basis, in my opinion, right now, GameStop supports a $31 million valuation plus their cash, right? And for a lot of people, this will be confirmed or denied tomorrow at earnings. Like, we'll find out. I'm valuing their Power Packs earnings as if they're real. A lot of people in the world probably are not until it happens. But once you see a quarter happen and you know the next quarters are going to be better, how many quarters would you wait before you'd say, yeah, it looks like it's probably worth at least 30? And if the retail business is worth 30 and they have 10 billion in cash, all of a sudden that cash no doubt becomes dilutive. So you take the diluted, like the dilution impact, and all of a sudden you're talking about S&P 500, and then it's off to the races from there. So Q3 really, like, it just depends on how much investor hype goes into the Power Packs numbers. No doubt it will be good. The question is, like, can GameStop get off of the floor, right? Can we stop talking about the floor, and can we start talking about the fair value? Will earnings do that for the stock in a day, in a week, in a month? Like, this Q3 earnings, does it have the potential to get the conversation away from the floor and onto the fair value? If it does, then it's bombs away, right? It's the warrants diluting, it's the convertibles diluting, it's the cash influx. All of a sudden we're deploying cash, the stock's going up, right? And then more quarters come out, Q4, more lines for Power Packs. Like, all bets are off if Q3 numbers get the conversation away from the floor onto the fair value. If they don't, or in other words, whether that's people, institutions don't trust the numbers yet, they want to see another quarter happen, or if it is Wall Street with all of its tools and powers bringing out all the stops, trying to crash it low into January, it's possible that despite Q3 numbers crushing, that yes, the conversation is still a conversation about the floor. It's possible that the powers that be still have enough power even after Q3, even though GameStop doesn't exist in a vacuum. But if so, anyways, fundamentally, there is a possibility. I'd give it a 25% chance that basically the blowout quarter pops this stock beyond that 30 threshold. And now we're fighting for 30, 32, 35. And eventually it becomes a melt up because of all those tranches of what's triggered, right? The warrants, the convertibles, the S&P 500 impetus. I'd put that at a 25% chance. I think it's like a 99% chance that there will be some amount of days where the stock is trading higher than 23, 24. You know, it's just a matter of, does that set a new floor that then begins melting up? I'd put the melt up at a 25% chance after Q3, but I'd put it at a very high chance after Q4. What I would put as the 75% chance after Q3 is, well, I guess like 60% chance, 70% chance. I would say that basically you see a run up to 28 to 32 or 28 to, you could even say 28 to 40, but it then crashes back down, but that it sustains above 23, 24, like the floor becomes more like $24 a share. I'd put that at like a 60, 65% chance. And that leaves like a 15 to 20% chance that you see it actually crash, like whatever it spikes to, like maybe it actually touches 40, but then it ends up crashing back to 21, 20, 19, 15, like the huge all bets are off, full stop asylum of GME. And so anyways, how you should play or trade the stock is your decision. I'm not here to give financial advice, but those are kind of my expectations. As much of a blowout as it is, it's possible the conversation is still centered around the floor. If the conversation is still centered around the floor, then the stock is still going to be centered kind of around where it is, but a little higher. That's the most likely to me, unfortunately. However, I am still like, I'm not looking to swing trade Q3 in particular, because if it's not Q3, then it's Q4. And if it's not Q4, then it's Q1. Like it's very, very close to some dramatic fundamental appreciation. And that's without the technical values being triggered, right? At some point, some dam is going to break overnight, in my opinion, and GameStop will have explosive days like it's had in the past. It'll have days where it goes from 22 to 42, right? Or a 3-month period, a month period where that happens, or a day where it goes from 10 to 60, right? Or from 40 to 62, from 21 to 33. Like you're going to see runs, not as dramatic as 2021 because of the convertibles. It kind of suppresses the level of volatility that you experience, but genuine movement on the stock is soon and inevitable. And if you don't think explosive upside is possible, then maybe you would swing trade more, right? Or if you don't think fundamental value is that high, like if you think that basically technical value is all dead and gone, like MOAS is impossible, Wall Street controls that, it's never going to squeeze, and you think that these fundamental values are way too pie in the sky and GameStop will never accomplish them, if you believe both of those things, then you would trade more. Just take the gains when you can, buy the dips when you can, let it be an income generator. If you think either that the technical value being very high, like a squeeze scenario, is very much still in play, or you think that the fundamental outperformance is very high, like the ability for extreme appreciation is very meaningful, like whatever, like Tesla in 2019, or like NVIDIA over the past 3 years. Obviously, some of those got pumped beyond their fundamental value, but that's what happens when fundamental value flips. Like we're talking about fair value for GameStop at 120 a share. Well, who says it only has to trade at fair value? If it's trading at 120 a share, why wouldn't someone want it for 180 a share, right? As you start reaching new levels of pricing, the investor psychology shifts dramatically. And all of a sudden it's, well, hey, this is the going rate. You want to buy it or not? It's the only GameStop in the world, So like, if you really, if you believe in the fundamental value that they're creating, then I don't think it's you can do what you want. It's riskier to trade more aggressively because the opportunity for that fundamental appreciation to begin quickly is very real. And also from a tax basis, you save yourself some income tax, can shift into long-term gains, etc. All right, a couple more questions here and we can wrap this up. Skyback says that they would only sell into a volumetric event. Yeah, as far as trading the stock, like looking at IV and looking at the volume have historically, like the volume of shares traded, historically, those have been pretty big keys for, is this going to get crashed afterwards, right? If there's all of a sudden 50 million volume when it's averaging 7, it's an indicator that, like, okay, we're talking about some type of swap date, settlement date, forced closed event, and we can sell it if we think that after this day it's going to get rolled, etc. Now, if the volume was like 500 million, right, or that might be a stupid number to talk about, but like at a certain point, you could see a volumetric event that makes you think, man, this could trigger more forced close events tomorrow. Like this could be January of 2021. And in that case, you would feel kind of dumb selling big portions at a 40 if you're like, well, shoot, it went from 40 and then it went to 80, and you'd be like, why did I invest for 5 years just to get out to break even? You know what I mean? So you just have to look at yourself, past, present, future self, and think about the decisions that make the most sense for you and what do you respect. But trimming and, selling 5%, 10%, 20%, sell 50%, those are all very different from selling 100% of your position, So anyways, Andrew started collecting because of GameStop. Same here. I was not into graded cards at all. And then GameStop started getting into it. I'm like, finally, something that I can dump my money into GameStop for, So I've just been asking for graded cards every Christmas and the past 2 years and buying cards and really enjoying the hobby. And I didn't before. It's literally like, I don't really play video games because I can't do it in moderation. And so it's been awesome to get to support the company, and I've really enjoyed it. D. Dunt says, Jeremy, your math and transparency of estimates is unique. Right or wrong, you're an open book. Thank you. And I agree. I am an open book. Pressure in time. You're right, DT Bowles. Chris Cole says, thank you, Jeremy, for the analysis. Cheers, man. Cheers. Jesse Amaya says, thumbs up and subscribe. I do appreciate the love, Jesse. Hey, let's see if we got any other subs. Let's go. We got one more. 8 away. 8 more spots to the Halo freaking sub club. So exciting. Funhouse says your analysis of GameStop warrants an interview with Ryan Cohen. Thank you. I got confused there for a second because you said warrants, and I was like, oh, we're talking about the warrants. But no, you're saying my analysis warrants an interview with RC. Man, what a dream. We just got another. Did we just get another? Or was that the one we already saw? 7 spots left. 7 spots left in the Halo Sub Club. Super exciting. 6 spot. Oh my! Guys, it's about to be a wrap on the Halo Sub Club. There's only 6 spots left. Thanks, guys, for the love. I appreciate it. Marcelo, late to the show. We'll check it later. What's up, Marcelo? We just got another sub. Only 5 left. Man, someone's not going to be in the Halo Sub Club that wishes they were. Tell you what. Closing up fast. Another person said, please stop using Robinhood. It hurts your credibility. Hey, I don't use Robinhood for trading. And for the money that I manage for clients, I don't manage it on Robinhood. So my credibility as far as like a stock trader, I'm fine if that, like, I don't need you to find me credible as it relates to stock trading. Another sub, only 4 spots left. What I want you to find credible is my analysis of the fundamentals, which has nothing to do with Robinhood's charts, But even if you don't find my analysis credible, like that's why I'm an open book on how I'm thinking about things, right? the rationale that I'm using. Just got another sub. Only 2 spots left until we're at 2. Only 1 spot left until 2525. Oh my gosh. This is very exciting. But hopefully, even if you don't trust me, you can look at the way I'm looking at things and think about how you think about things and see if it's different, if it's better, worse. We just lost a sub. Haters out there want to keep me in the grave. Just kidding. I'm doing fine. What if we never get there, guys? What if we never hit 2525? Will I survive? Yes, I will survive. So, anyways, I understand using Robinhood charts does not make me look impressive as a trader or as a financial influencer, but I'm not a professional trader or a professional financial influencer. So it doesn't really matter that much to me. I am a professional financial advisor and I don't know, an aspiring financial analyst, a semi-pro financial analyst. But those hats of mine do not overlap with Robinhood charts. So anyways, I use the charts because they're the easiest to look at for the smooth brains of the world like me. I would not use these as trading indicators at all, to be clear. Oh, let's go. We got it back. One left. Yeah, Lego's 30th anniversary of Pokemon 2026 is going to be insane. 2525. Boom, 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 boom. Let's go. And we got an extra one for cushion. So whichever one of y'all shills that wants to leave, guess what? We're still at 2525. Take that, algorithm. What's up? That was very satisfying and enjoyable. I'm trying to catch up. Oh, there we go. We're back at 2525. That's good because I like seeing it. Let's just take that in. Such a fun number. John today says the best part about Jimmy taking so long is that I've acquired enough shares that I don't mind trimming. Yeah, I mean, that's if you're at 100% weight, obviously that's very different from being at a 5% weight as far as your net worth. John didn't say he's at 100% weight, but if he was, then it's like, well, man, if it goes to 40 and if you have to pay rent with that money next month, it's like you should probably at least take out your rent money. Like some people out there use GameStop as their actual savings account, and so obviously there might be days that you have to sell whether you like it or not if you have to pay for something and you don't have any other money, and that's another totally different angle to think about how you play the stock. That Young Squire says, hey, great channel, props. Thank you. Placer with the king crowns. One for me, one for you. Noggin. Daybreak Dreamers. What are your thoughts on Jimmy being included into the S&P within the next year? So if you watch, whenever this live stream gets posted, I talked about that in the first half of the stream. The S&P gets a shout out, but I think it will. Ryan Brown says, keep streaming until you complete the Halo Sub Club. Hey, accomplished. Skybike says, push it to the limit. So in it, win it, in it to win it. Oh, yeah. What is the contrarian stance to your analysis, Fabianc? I don't know. You'd have to ask the contrarians. Some people think, the main, I'll make a video soon about some of the contrarian takes in some of my comments and kind of parsing them out. But most people don't debate what's to come. They just point to the past as if it is prescriptive and limiting for GameStop. And so there's not really that compelling of a contrarian take, but there are some. But it really just comes down to how fast do you think it's going to keep growing? How much do you think digital power packs is going to do? Will they be able to keep doing it? What if Bitcoin goes to zero? What if collectibles go to zero? What if consoles go to zero? Like there's never like rationale for why those things would happen. It's just kind of like what if takes. But as far as like genuine contrarian valuation for the stock, um, it like digital power packs is the linchpin for all of it. And then the other like that I didn't talk about at all in this video because I didn't even want to get into it is the asset management business. So there's plenty of counterpoints to how I value GameStop's asset management business because right now it is in a SPAC stage. SPACs are by definition like speculative in nature. And so how do you fairly value a speculation? There's a lot of ways, right? There's many valid approaches to valuing a SPAC. And why would you value any SPAC above net asset value? There are historical reasons, but you could also argue that even when those times happened in history, that those other SPACs were wrongly valued at that point also. Like you could say that you should never value cash more than cash, no matter what. It doesn't matter if it's excess cash or if it's opportunistic cash, right? And I didn't talk about that in this video because I don't want that to be the counter argument to what I was sharing in this video about where I expect the stock to go as far as the floor prices in the coming years. So all of this that we went through earlier, this is all just valuing cash at cash. None of this, I'm not placing any premium on cash, and I'm not valuing their book value for a single dollar, you know? And again, what happens after S&P 500 inclusion? Well, the floor keeps going higher, right? And the trailing 12-month keeps going higher. And so all of a sudden, the floor share price is also continuing to go higher. So anyway, it's exciting times. But these are things GameStop can accomplish without any cash deployment. I think that's so important. I should make 7 videos talking about it because people act like until GameStop deploys the cash, you shouldn't give this company anything other than a 10 PE, right? No one cares about the retail business. A lot of bulls even talk like this, that we're all just waiting around, waiting for the cash deployment. And then finally, there will be a bull case for GameStop. But the fundamentals do not say that at all. Like the fundamentals are super clear in this whole deal I just spent this whole live stream laying out, which this is my longest live stream to date. We're putting in some hours this morning, and I'm starting to feel like, oh man, I thought I'd be getting more work done today, but I'm still talking about the stock. Anyways, we don't need GameStop to deploy cash to accomplish these goals that I've highlighted in this video. The cash deployment then gets into the next really tranches of fundamental value. But if we're talking about a $31 billion enterprise plus the then $12 billion they would have in cash, you're talking about $43 billion of value plus whatever premium you would then place on their inevitable S&P 500 inclusion, and however you would then value the growth at that point, right? So on a PE basis, if they actually accomplish these goals, does then the fair PE actually rise? And this is the weighted average, right, of their retail business. But it's quite possible that we end up actually at more like that $65 billion valuation just 1-2 years from now within their retail business. No cash deployment, no M&A, nothing else fancy, just their retail business and their digital power packs could command a $65 billion value. Again, then plus all their cash, which at that point would be like 15 billion. So if we're talking 80 bill on just the retail business, well, shoot, that's an 8x from their current market cap without any cash deployment. So then if you want to deploy cash, well, now we're talking bonanzas. And if you add the asset management business and retail business together, then yeah, the runway to add an extreme level of fundamental value is totally there. Like a 20x, in my opinion, is in the cards right now for how you could value their business right now. And we'll see as the years go on whether that goes up or goes down based on how they execute. If it's 5 years from now and they haven't deployed any cash, then I mean the fair value on their asset management business is going to come down. Right? You can't get a premium value as a SPAC and not do anything for 5 years, right? So they got to do some stuff. But if they do stuff, they might do stuff even better than what I project. And if the stuff they do is even better than what I thought they would do, then their fair value is going to go up too. You know what I mean? Anyways, so contrarians, there's plenty of contrarian about all the asset management stuff. But again, there is so much runway fundamentally just within the retail business. And the contrarian takes on the retail business are really just about the digital power packs line. How sustainable is it? How scalable is it? What type of PE do you give it? Yes, Zamora says, he shared my video with someone and they can't take me seriously because I use Robinhood and do free marketing for them. That's okay. They don't have to take me seriously. If they do take me seriously, it should be based on my fundamental analysis, not based on what platform I use to show a ticker. And if I have fundamental analysis that's helpful, then to throw it all out because of a ticker display is crazy. If you as an investor thought that me as an analyst could offer you a perspective that would help you make better decisions as an investor, I mean, just crazy to be like, nope, uses Robinhood. I don't care. It's like, you sure? You don't want to like even listen for a sec? If it's going to help, if it's not going to help you, then of course. Oh, let's go. Wham Bam says, I just subscribed with my second email account for the 2525. Let's go. Let's go. We getting those rehypothecated subscriptions out here. Two can play the naked short selling game, Wall Street. Let's go. John today said, I really enjoy the video format where you take a comment that asks a question or gives an argument against you and you expound on that. Yeah, I've enjoyed those too. Fabian says, does Power Packs make them single threaded in terms of growth products? Holding cash is not a growth product. Why isn't the stock receiving growth multiples? And then he said, great analysis and walkthrough of your numbers. Glad to see someone laying out their detail. Yeah, so I think I addressed that already. John today says, if you can't take someone serious because they look at a chart from a certain company, that person can't be taken serious, LOL. Zamora says, I agree, but TradingView is far superior. TradingView is far superior for trading. I'm not trading the stock. I've been buying the stock for years. TradingView. What's it even look like? How hard is it? Get started. What do I need to do? Well, I got to sign up. You got to pay. You want me to pay for this? You're trying to bankrupt me, bro. Bankrupt me $13 a month for what? For something I don't need? Lame-o. No, I gave it a shot. I gave it a shot just for you, Zamora. Go to products, charts. That's what he said. I don't know where. Oh, products? Is it super charts? Okay. See, look at that, man. I'm trying to get better, but y'all seriously want to look at that all day? Like, it's just like, I get it's so much more helpful if you're making decisions based on this. But if I am not making decisions based on this chart, I just want to show the ticker. You know what I mean? Like, like this. If someone's a finance bro, of course they would rather see TradingView. But if someone's not into finance, like this is such an intimidating layout to look at. Genuinely, that's just my only. That's my only thoughts about it. But again, if I was an investment banker, if I was a day trader, of course, if I was making decisions based on the technicals, of course I would be on here. But I'm focused on the fundamentals. So this is where I spend my time. Right here on the spreadsheet, right here on their reports. You know, this is like when I start typing in GameStop in my browser, they're like, do you want to go to GameStop.com or do you want to go to GameStop Investor Relations? You know, which one are you talking about? Anyways, I agree, though, Zamora. I agree. It would increase my credibility within a certain portion of the world, most of the finance world, if I use TradingView. Point conceded. All right. Are we still there? Let's go. I thought they might have attacked me down. I thought I might have been at way lower. 2528. So fun, guys. So fun. All right. I should probably wrap it up. Any big 2529? What? Y'all are too good. Y'all need to say less. Doing too much out here. I think I have said enough as far as what I expect from the stock. I think I have answered that question. I try not to dabble into what you should do with this as the stock. And honestly, I don't like talking about what I think the stock will do that much because I don't want to be framed as like trying to sway you to buy. And especially, I don't want to be framed as trying to sway you to sell. CrossFit George, yes. Jump back to the beginning of my video after it posts. I talked about EPS. Because anyways, I don't want to be like, I'm not really like the anti-squeeze guy. Like, I think the squeeze can really happen, you know, and whatever portion of your shares you're holding out for the squeeze, you should obviously not sell until during or post MOAS, if that's what you're holding for. If 100% of your shares are holding out for that, I would hope that 100% of your net worth is not in shares. As a financial advisor, I would hope that some portion of your net worth is dedicated to something other than GameStop must be $1 trillion a share, you know. But ultimately, that's your decision. You know, my clients will sell, like I will sell some shares for my clients as it appreciates to certain percentages of their portfolio. Like as GameStop loses its downside protection, if GameStop's going for 100 billion right now in market cap, right, a 10x. Fundamentally, can they support that? Yes. Fundamentally, is there still upside from that? Yes. But fundamentally, is there downside from that? Yeah, like it could go lower, you know. And if you're going to be at a super, super high concentration, 100% concentration in GME, I would hope that one of the reasons for at least some portion of that is downside protection. And I would hope that you protect yourself if you lose some of that downside protection. But again, that's why I don't like talking about the stock, because no one wants to be like, oh, maybe you should trim, you know? Like, I don't want to be that guy. Anyways. British Shilling says, I use the spreadsheet a lot when explaining GameStop to my friends. Incredibly useful. Thank you, Jeremy. Thank you, British. Thank you. And John Day says, I'll have to email you about getting your spreadsheet first to the friend sub, but it's been so busy. Yeah, it should be super easy to find my email. I think it's honestly public too, but on my my member only post, the email there to send, and I will add you to the spreadsheet. It's a cool place to be, cool place to hang out. CrossFit George. He's crunching numbers out here. Anyways, all right. Love all you guys. Thankful for the support. Super pumped to see earnings tomorrow. Hopefully this helped share some of my expectations for the stock. And hopefully I didn't step on too many toes with the charts that I use. Step on too many toes about why I think $20 is in the past and appreciation is in the future. Hopefully I didn't step on too many toes saying I don't think Wall Street controls the universe, but I think GameStop actually has an ability on its own, regardless of what anyone else thinks, to increase its shareholder value. And hopefully I didn't step on too many toes talking about portions of portfolios dedicated to different purposes and should you buy or increase or decrease based on different tranches. Right now, no matter what portion of your portfolio is what, right? Downside protection, market protection, fundamental outperformance, technical outperformance, MOAS, like cash deployment, collectibles growth, digital power packs, explosion. No matter what, if you were to tell me right now, like, hey, I'm at blank percent, do you think I should increase to blank percent? Again, it's not financial advice. I would have to know you to know an actual real answer, but pretty much I'm like, yeah, I mean, pretty much, it's probably no matter what your purpose and time horizon is, probably a decent time to be adding. But should you trim, it gets very nuanced and very personal to each person. And again, I'm not giving financial advice here. All right. Thankful for you guys. That's all I got for y'all today. I will see you in the next one.